the mega CNBC TV18 poll, which also indicates a reasonable amount of bullishness on the part of CEOs, have all contributed to make the markets climb back to the 8,700 mark. 8700 as I speak on the Nifty, but the mid-caps are having a mind-boggling 2% rally. There are over 8 stocks in the green for 1 in the red to celebrate what I would think also partly the CNBC TV18 poll, which says that 80% of the 50 companies polled, the 50 top CEOs polled, say that the year FY17 is going to be a better year than FY16. And of course, more things, 24% of those polled also expect a 20% growth, plus growth in their bottom line. Prashant Nair, our editor who supervised the conduct of this poll, is also with us, as is of course Rima Tendulkar. And let me on that note invite Varun Berry, the Managing Director of Britannia, to speak to us about his impressions of the poll. Good morning, Varun. Thank you very much for joining us. Well, first up, let me take something which hurt the CEOs most, the deflation question. 60% said deflation is over, but 40% say deflation prices can still fall. Your take, is this too pessimistic a view?
So in our case, deflation's over for sure. So we are seeing inflation right now. Our material cost inflation is right now sitting at about 9.5%, and the earlier estimate on this was about 5.5%. So it's a fairly high inflation at this stage, but very happy with the government's very proactive approach on this. In fact, some of the commodities like wheat, they've reduced the import duties, similarly on oil, and they've put some stocking limits on sugar, so that's going to cool down the commodity rates. But yes, deflation is for sure over for us.
Varun, hi, good morning. Prashant also joining in. So this is, it's over for now, but in terms of expectations in the future, you're telling us that there is no problem. I mean, no real expectation that prices will fall.
Yeah. Certainly not. So we've had 2 bad years from an agricultural commodity standpoint. So we are going to see 1 more year of very tight commodity situation. This year's monsoon is going to only impact us in the next year, in the next financial year. So this year is going to be very, very tight from a commodity standpoint, and hence prices will go up.
Okay. Mr. Berry, good morning. Are you also in the camp which believes that FY17 growth will be better than FY16? And you had about a 10.5% revenue growth last year. What should we expect for FY17? Mid, double digits? Would it be, closer to the 20% mark? Give us a sense of FY17.
Yeah, so we don't usually give an outlook. So what I'm going to say really is what I generally see of the market. So from a category standpoint, I do think that the good monsoon, coupled with the 7th Pay Commission, along with a very good approach from the government, the GST rollout, etc., is certainly sending a positive message to the consumers. So we are seeing a little bit of an uplift as far as the consumption is concerned, and I do think that's going to continue. The issue really is going to be on prices. I do think that the inflation will lead to price increases, and that could subdue the demand in the long run. So I would say at this point in time, looking positive. And I would think that for the next 6 to 8 months, we will continue to see this positive move in terms of consumption.
You're giving us a very different picture of inflation altogether, Mr. Berry. Until now we had people cribbing to us that they are not able to raise product prices. This is looking different. So, and that was also borne out by the analysis of numbers. We saw a lot of profit growth because raw material costs fell, but revenue growth did not pick up for the large swathe of Indian corporate sector. How would the second half pan out for FMCG companies, for instance? Will revenue growth also pick up?
I do think so. The categories are showing some kind of uplift as far as consumption is concerned. So I do think that category growths will start to pick up. It's just that with the category growths, as far as the food companies are concerned, there is going to be a price increase coming in as well, which could subdue these growths as we go forward.
Price increase coming from Britannia?
Well, we've been taking prices because, it's very difficult to absorb a 9.5% inflation scenario. So we have been taking some price increases as we talk. And we've been able to absorb that. So we will start to see other companies also raise prices.
Varun, so the last one was about 5% sometime back, right, in June. Anything coming immediately, imminent? Can you tell us if you increase? Yes, go on.
Yeah, so we've taken some prices. Now, we are dealing with a 9.5% inflation scenario. So it'll probably be more than what we'd said earlier. So it's probably going to be about 7.5% price. We have to take about 7.5% price as we go forward. And that's going to be the weighted average for the year. Okay. So we have taken a bulk of that, and we will take a few more prices up as we go forward through the year.
Okay, so you're saying the weighted average price increase for FY17 will be closer to 7.5% versus your earlier expectation of 4 to 5%. Would that be correct?
That's right. That's right. That's right.
Okay. What kind of volumes growth are you expecting, Varun?
We've been seeing reasonably good volume growths. We've got to see as we roll out the price increases how this pans out. I would think that the atmosphere is pretty positive. So I would think that at least for the next 6 to 8 months we will start to we'll continue to see positive growths as far as our categories are concerned.
Okay. Do you expect the cost of money to fall substantially for your companies?
Well, first of all, it doesn't impact us because, we don't borrow. We are at zero borrowing today. However, I do think that, while the repo rate was cut, it was cut from 8% to 6.5%, the consumers only saw 50 basis points. So, I think that is the first issue. Going forward, I would think another 25 to 50 basis points. Because while we'll be cutting interest rates, the internationally interest rates are starting to go up. So there has to be a little bit of a balance. So I would say between 25 to 50.
Varun, just at the point of margins, even as you take price increases, right, to protect margins and to take in the cost increases on the input side that you're seeing, your gross margins will expand. But what will happen at the EBITDA level, if you can run us through? Because there are a lot more variables by the time you get from gross to EBITDA, right? Competition for one, etc., ad promotions, etc. Anything you're seeing there? Anything you can share with us for the year as a whole?
So we, as I said, we don't give an outlook. But yes, you're right. It's going to be a very fine balance. It's going to be a very, it's an artist who's going to, we'll really have to become artists to draw that fine balance between the top line and the bottom line. And I think we are going through that phase, and I think we are doing a good job at that. Hoping for the best. So, getting the prices up, making sure that we keep our fixed costs low, and continuing to see growths as far as our brands are concerned in the market, continuing to grow consumption, I think is what we are looking at.
I'm not asking you for a guidance, but I'm just asking you, which category would you have fallen? Because this was an anonymous poll, and you probably were polled. 26% of the CEOs polled said high single-digit growth, 18% said 11 to 20%, and actually 24% said over 20% profit growth. Which category would you fall?
Well, I would think that it's, if my profit growth is accretive to my top line growth, I'll be very happy. and I certainly would like to see, a double-digit top-line growth. So I would fall in that middle category.
All right. Thank you very much, Varun Berry, for joining us with your thoughts on all those important indications we got from the CEO poll. And I think the key takeaway we have is that inflation is there in several commodity prices, and I think this will not be lost on the Reserve Bank. We should not run away with too much by way of expectations. But